Hello, everyone, and welcome to today's online information sharing event hosted by OTEA. My name is Jasmine, and I will be your host for this section. Before we begin, I would like to thank you all for taking the time to join us today. And on behalf of OTEA, I'm so excited to introduce our speaker today, Celia Su. Celia holds a master's degree in accounting from the University of Auckland, and she's currently a senior accountant at Moore Markham, New Zealand. Today, she will be sharing her professional journey in New Zealand with us, and also providing an update and overview of the New Zealand government 2025 growth budget and associated tax implication. This is crucial for everyone in New Zealand because it has a direct impact on your wallet. So we are so excited to have Celia with us today. All right, let's welcome Celia. Hello, Celia.
Hi.
How are you doing today?
Thanks, Jasmine, for the brief introduction. And I'm Celia. So today I'll briefly go through the journey how I get my CPA, and just briefly talk about the difference between CPA and CA, and also discuss about the new growth budget that the government just published on 22 of May. And then we will have our Q&A session. So let's start with it, if it's okay with everyone.
Before we get started, I just want to thank you again. Because I understand that this is your second time sharing your professional journey with us. And giving you a busy schedule, and also a big congratulations on becoming a certified practicing accountant. Qualification.
Thank you.
That's awesome.
Thank you, Jasmine. I just get qualified during June. It's just July right now, so it's quite recent. So I'm just going to share about my journey, about how I get the CPA, and just as Jasmine what she introduced. So I'm currently working as a senior accountant at Moore Markham, Auckland. I work here for about nearly 3 years, so it's like 2.5. I'm graduated from University of Auckland, which I held a Master of Management and specialized in professional accounting degree. During my undergraduate, I studied in Chong Yuan Christian University, and I studied applied linguistics and language study. So in Moore Markham, I mainly specialize in tax advisory and financial reporting, and analyzing your financial statements, something like that. So that's what we do in the firm. So just to talk about CPA and CA, because I think in accounting area, like these are the two are the main qualification. So in New Zealand, I think there is majority of the accountants, they held a CA degree, which is issued by Chartered Accountants Australia and New Zealand, which we call CANS. And they will have a graduate diploma of chartered accounting after they completed their CA degree. So they will have like a diploma, an additional degree. And for CA, they are more specialized in technical aspect of accounting, like auditing, taxations, and compliance with financial regulations. So if you see people who work in a firm, they usually will have a CA degree, but I also have people who have a CPA degree like me, which is a certified practicing accountant. This is issued by CPA Australia. So actually my certificate is from Australia. So I study Australia taxation rules as well. We also complete a degree in accounting. We focus more on the business aspect, like CA is more specialized in taxation, but we will focus more on the company side. So we will more like management accounting. So that's the little difference between CA and CPA, just to let everyone know. So the next one. So just talk about how you get qualified through CPA Australia first, because this is how I get my qualification. So first, before you want to start the CPA program, you will have to meet some core competency requirements. Like first, you need a recognized degree in accounting. If you don't have a recognized degree in accounting, you can still start the CPA journey as well by completing their foundation exams. There are several foundation exams that you will need to complete, just like what I put in the slides now, like accounting systems and process, finance and financial management, accounting and reporting, management accounting, economics, and business law. So when I started my CPA, I actually I submitted my my academic qualifications out to CPA Australia, but I'm still missing one business law because I took my business law in Taiwan, Chung University. So technically, the law in Taiwan is different with New Zealand and Australia. So I will have to retake the business law course again. So I need completed one business law foundation exams first to start my CPA program. But if you like held an accounting degree in New Zealand or Australia, technically you don't need to complete those foundation exams and you will get exemptions. And then for the CPA programs, you will have to complete like 4 compulsory subjects, which is ethics and governance, strategic management and accounting, financial reporting, and global strategy and leadership. So these 4 compulsory subjects for the global strategy and leadership, this one is like your capstone one. So you can only complete this one after you completed the 3 that is mentioned previously. So that is like the last paper to complete. And you also can have to choose 2 elective courses to complete as well. So there's a list that I list out in the slides, but if you don't mind, this is audit and contemporary business issues, financial risk management, digital finance, and taxation. So for the elective course, there's something to note that if you didn't complete audit and taxations in past during your uni, these 2 will become your compulsory subject, which you are not able to choose as an elective, like you must do it. But because I completed audit previously already, so I don't have to choose audit as my elective. I choose digital finance because I found out cryptocurrency is quite interesting issue recently. And another one I choose is taxation, because the taxation that I had previously is also in Taiwan as well. So taxation become my compulsory subject, which I have to complete in Massey University. So these are the 6 subjects that I choose when I complete my CPA program. Also worth to note that for CPA, they go through semester. So it's like 2 semesters per year equals like you complete 2 subjects per year. It is different with CA Cairns New Zealand because they can do it quarterly. So basically you can complete 4 subjects per year. So you will complete your CA faster if today you don't have to do a foundation exam. So that's another thing that I will mention later, but this is the main difference for CPA in terms of the exam schedule. And for the experience wise, you also have to gain 36 months of full-time experience. So it's like 3 years full-time experience, and it has to be related to accounting, of course. And also your experience need to be signed off by a CPA or FCPA or Cairns member to be recognized at the same time. So that's why a lot of people, when they just started their accounting career, they will choose to work in a firm, because usually people who work in a firm, they are all CA or CPA qualified. But if they are working in a company as a financial accountant, having qualification become not compulsory, and if they started to work there, they may not be able to get their experience signed off. So after you get qualified, like now, like after I get qualified, what should I do is I still have to continually develop my profession. So we have a requirement, like in total 3 years, you have to do like the continuous development learning courses, and these courses in total need to sum up to 120 hours. So yeah, it's not like, oh, okay, I get qualified and then I don't have to do anything now. I don't have to start to keep learning. No, you still have to keep learning. That's a compulsory requirement to maintain your qualification. So for the next slide, let's talk about Cairns, which is the one in majority in New Zealand, because this one is like originated from Australia and New Zealand, but CPA Australia is they're quite new organization. They are newer than Cairns. So, and then they started in Australia. So they are somehow like coming from Australia and then started to come to New Zealand. So people in New Zealand, you will see a lot of them, they are qualified by Cairns for CA. So for the core competency requirement, they have something similar as a CPA. You also have to hold a CANS recognized degree or qualification. If you didn't have it, then you have to complete their foundation exams. And also you can see the foundation exam subjects are quite similar with CPA Australia as well. And for CA program, this is a place which is a bit different with CPA, because here you can.
Celia.
Yes.
Sorry to jump in. Your slides still stay on the first page.
Oh, really?
Yeah.
Does it work now?
Yes.
Sorry.
It's okay, but I think it's quite a long journey because you talk about a lot of technical terms. And to be honest, we are not accountant. Because you didn't share your slides with us.
I saw the slides are moving through. I didn't notice that. Sorry about that. No. But yeah, does it work now? Is it on CANS? Is it on CANS?
Yes.
Right now? Yeah. Sorry. Yeah, because I think I started. Yeah, I show the slides, but maybe it doesn't show up at the same time when sharing the screen. But yeah, that's let me know if there is any more technical issues. But yeah, and okay, so this is for CANS, and for CANS, their compulsory subject is you can see it's longer because you have to do 9 papers. But these 9 papers, you can do like 4 papers per year. So technically, you can finish CANS like maybe 2.5 years. You can finish it, but not like for CPA, you need to have minimum 3 years to finish it. So even you can see the subject that you have to work under CANS is more than CPA, but this one, if you work hard enough and get passed for every paper, you can finish it faster than CPA Australia. For experience side, it's also similar. So you also need to have 3 years working experience, and it's full-time as well. And the difference with CPA Australia is you need to meet with your recognized mentor every 6 months. So see, like, did you have like the defined outcome that you have discussed between your mentor? So it have to be monitored by your mentor and catch up every 6 months. So that's a bit different. And for the continuing professional development, that's also the same as well. So with CPA Australia, so like in total, you have to complete 120 hours every 3 years for the learning courses. So yeah, that's mainly the difference between CA and CPA. So you can see like these 2 qualifications actually are quite similar in terms of how you get it and other courses they have to study. So the professional wise is, yeah, you can say that they're both equal to each other. So I think today, most of the people, they are here to see the gross budget, I assume. So yeah, it's going to start with the gross budget part. So this is an overview of the 2025 budget summary. I know it's quite a lot, which I'm not able to cover it within the 30-minute session of today, but I will pick up some important parts which will affect everyone's life in terms of money-wise today. So yes, to get a better understanding of how the budget will be affecting your daily lives. So for the overview, we can see here, mainly you can see the government, they put the budget mostly on the hospital and the military side, and also invest a lot in education. And you can also see something interesting here, which is math help. Like as people know, students in New Zealand, their math is not that good yet. So the government also acknowledge this, and then they have extra math help for students who need it. They invest 100 million for the support on this side, and also for the police, frontline police, they also invest some budget into it as well, because the recently New Zealand is not that safe anymore. So the police, I think police is also spend a lot of advertising for recruitment as well, where we are a little bit lack of police. And for hospitals wise, they were also building new hospitals, and also for public health side as well, they have some social investment, and for the court delays, they also invest some budget on it as well. So yeah, these are the main summary of the gross budget. So this year, the operating allowance is held to 1.3 billion, which is the lowest within 10 years. So this statistic report came from Treasury New Zealand. As you can see, which I mentioned previously. So health-wide is the first place, which which the government is investing. And the second one saying is under investment boost, which I will mention about it later. Then it will be defense and education and law, business, disability, business, things like that. So yeah, these category make up the whole budget or total budget of this year, which the government aim to claim to. So investment boost. So this is a quite big change in terms, if you are a business owner, you may be aware about this. So for this investment boost, it means that it's as a business, you can deduct 20% of the new asset cost plus normal depreciation so it's encouraging you for the capital investment. So what kind of new asset can be eligible? It have to be new to New Zealand. And another thing is, if you started to use this new asset before 22 of May 2025, then you cannot back claim it. So these new assets can only be started after 22 May 2025. The government will focus that this investment boost policy will help to lift the GDP by 1%, wage by 1.3, and capital stock by 1.6 over the next 20 years. And this is like a tax incentive for business to invest in productive assets like tools, machines, or equipment, something like that. So there is no capital limitation on the investment value for this investment boost to be claimed. So like, let's put in a practical example. So for example, if today your business, you purchased an equipment, which is 100,000, and this 100,000 equipment is eligible for the investment boost because it's new to New Zealand. Okay, so in the first year, what does it mean? That you can deduct 20% of the new assets cost. So it means that you can take off 20,000 of your taxable income due to, you can deduct it. And then on this base of so after you deducted 20,000, your asset value become 80. So become 80,000. Then assuming your depreciation rate is 20%, so your depreciation expense will become 16,000. 16,000, yeah. So it becomes 16,000. So on the first year, your business can deduct 20,000 of investment boost deduction plus 16,000 of depreciation expense, which equal to 36,000 of taxable income deduction on the top of your taxable income. But this is only eligible for the first year. So this new asset, after it roll over to the next year, it doesn't have this 20% of new assets cost deduction anymore. So it's only can be applied on a first year basis. And also, if it's new commercial and industrial buildings, these are also eligible for the boost, but it will exclude land, residential buildings, and assets, which is already in use, which I mentioned previously. And because the cash flow from the investment improved, because we all know that depreciation expenses is only on the book value, but it doesn't affect your real cash flow. So technically, the government is giving you like a 20% of discount on your taxable income for that asset, of course. And then your cash flow will improve. So it means that these cash can be used to on other side, like you can have other investment opportunity, and then it will help your business, hopefully. So I think this is quite practical and cash flow positive for the business that may help with the business to considering new capital investment and also help with innovations. So next slide. The next side of the government, they are trying to attract foreign investment. So as also on the immigration policy side, I think for investment visa, the government also had some new policies as well. So you can see New Zealand government really want to try to attract foreign country monies. They try to attract offshore investment to invest in New Zealand, and also at the same time trying to improve some national right infrastructure. So at this time, they are trying to start international visitor fees for tourism. If any of your friends coming to visit to New Zealand, they may already heard about it, that New Zealand may started to have international visitor fee, and these fee will be used to like upgrading the conservation in popular areas, things like that. And also they are looking to deter the tax liabilities to some employee share schemes to help with startup and unlisted company, because for startup and unlisted company, their share value is very difficult to measure. So if they deter the tax liability to the time that the company is going to liquidate, it may be better to the company-wise. And they also try to change the international tax rules in New Zealand to make the whole New Zealand's business environment become more friendly for foreign investors. So these are the main things that the government are doing to attract foreign investments. And then the next one, this one is change to KiwiSaver. So this is something, if you have KiwiSaver, I believe most of the people who work in New Zealand, they will have a KiwiSaver. So this is something that may impact everyone's life, not about like the foreign investments or like the investment pools. For this one, the government is planning to lift the default contribution rate from 3%, which is right now. Everyone, if you didn't opt out of KiwiSaver, it will have 3% contribution rate from yourself and your employer both into your KiwiSaver. They are trying to lift it to 4% right now for both employees and employers by 2028. So also the government contribution now is being extended to 16 and 17 years old, because previously it's only like you can only get started your KiwiSaver when you are 18, but now they extended to 16 and 17 years old. But they reduced for people who earned over 180,000 per year. So I will talk more about this. So now for this year, July, this month, if you still have KiwiSaver and you put in the money enough into your KiwiSaver, you will still get 521.43 cents. But from next year, the government contribution will change to only half of it, which is 260.72 cents. And it basically means that the money that the government giving it back into your KiwiSaver is become lower. And just as I mentioned previously, so if you earned more than 180,000, you will no longer receive a government contribution of even 260.72 from next year. And the default rate will going to start to increase. Of course, if today you said that I don't want to increase that much, I think 3% is enough for me, I don't want to become 4%, you can apply for a temporary rate reduction but you need to tell your employer about it. Otherwise, your default rate will increase from 3.35% to 4%. But if you want to maintain it at 3%, you can still tell your employer, and your employer will also keep the same contribution rate with you. So that's the main change for the KiwiSaver side. Social welfare. So also there's some the government is also trying to invest in social welfare measures as well. This year for the budget, they've not focusing on cutting down the tax, but they are focusing more on giving relief. So like relief for vulnerable and low to middle income household people, like they are having adjustment to working for family threshold. And then so for people, if you receive working for family and benefit, then you will the threshold increase, and then you will receive more a bit every. I'm not sure how much. I think working for family is paid off yearly wise, yeah. And then also the government is planning to build more social house in Auckland, as everyone know that Auckland is quite crowded, and people here, the housing price is quite expensive, so people here will need like more social homes. So the government is also planning to build more houses in Auckland as well. For I think Housing New Zealand, they changed their name. I think they are managing this project right now. And also they are lowering the cost for the teachers so the government is going to cover for their registration and certificate fees through 2028. So it will save all of the teacher like up to $550. And then they are also lifting the income threshold to 45,000 for if you have a gold card. And then you can get, and your income threshold is under 45,000, you will be able to be eligible to a rebate, and this rebate is about $805, but you need to go online to apply for it. I think now you can already start. Yeah, started from this month, you can start to apply for this rebate. So if anyone in your family they need it, and then you can let them know, and then they may be eligible for additional $800. Yeah. So I think the time is nearly there. So in conclusion, I think overall the budget this year, the government managed it in quite cautiously, and they try to spend money in a wise way. So they lower the overall budget, but they try to use it precisely in every aspect. Actually, I think that it's quite good for the business as well. They try to have some policy which is benefiting the business. The KiwiSaver wise is like asking, like letting people to put more money into their KiwiSaver, but it also helps with people's retirement or even for people who want to buy a first house as well. And then I think overall the policy wise is quite reasonable. And then the data they are start to collect it on monthly basis rather than quarterly basis as well. So it will become more timely and reliable data for making economic decision makings. And in terms of these, I think it will benefit New Zealand more, actually. So yeah, so I think that it's actually maintaining discipline in public spending. And for business owners, there are some good sides as well. So I think it's overall the 2025 budget is quite meaningful, and yeah, it looks quite positive for me. So I think it's 3:30, and so now Q&A session.
Okay, thank you so much, Celia, for your sharing, because lots of technical terms, and also I think those messages or information are specific for New Zealander. Yeah, so probably not many people understand the background. Okay, so anyone has any question for Celia? You're welcome to put your question in the chat or just raise your hand. Okay, so before we see any questions pop, okay, here one. Okay, yeah, please go ahead.
Okay, doing now, I think you get the license. So your passport can tell you you want to get a new challenge. Do you, I think, get a license the one challenge? So the milestone you have been finished. So next challenge you, what kind of challenge you want?
Yeah, I think that is a very good question, which is also the current challenge that I'm facing right now. It's like, oh yeah, I completed my CPA. What's next to do? To be honest, I'm considering to start with a CFA. It's a financial wise license, but I'm still considering about it because I didn't know much about it, and I know that if I want to start a new qualification, I have to invest a lot of time and money wise as well. So that's something I'm considering about. But yeah, I think that is something. Also, another area I'm thinking about is maybe about the ESG area, because I think recently there's a lot of policies out there targeting about the environment and social responsibility area. I think this is an area that a lot of accountants they started to face challenge with, because once the government policy came in, they want the carbon emissions like to lower down, and then it will have some tax implications as well. I think that is also an area which is quite interesting for me to discover. So these are the two areas which I'm currently thinking about to continue to work on. Yeah.
Okay, I see. So you want to get a two major. Wow.
Not two major. This is not. I still like. I have these two ideas. I'm still thinking which one to go with, but it doesn't mean that I will go with both.
Yes, like I think so many persons have more major in there, but just one by one to read it or read it like this one.
Okay, so I just have a quick question. Just to clarify, now you've got the CPA, right?
Yeah.
Certified Practicing Accountant Australia. So you can also practice in New Zealand, right?
Yes.
Okay, I got it now, because a little bit confusing. Yeah, but because for those, I think for that exam, I think the material is for the rule, the tax rules in Australia. So how can they test your capability regarding the New Zealand's tax rule and those acts?
Oh, no. I take the taxation course in Massey University, which is in New Zealand. So I learn New Zealand taxation, not Australia.
But for that, that qualification, CPA qualification, did they test your knowledge about New Zealand's tax law?
For the taxation wise, because I go with the Massey University, so I learn New Zealand taxation. So I have been tested on New Zealand taxation basis. I didn't. I mean, I don't think I have been tested by Australia side stuff, because for other things, for financial reporting, management, accounting, these are all national-wide the same. It doesn't matter in terms of which country. The only thing that will be different in terms of country is taxation and the business. So only these two will have difference in terms of country-wise. But other things, for accounting principles, things, these are all, I think these are worldwide the same. So doesn't have a big difference. Yeah.
Okay. Okay. So OTEA, do you have any questions for Celia?
Celia, thanks for your introduction. My question is quite simple. What is KiwiSaver?
What is KiwiSaver? So KiwiSaver, it is so basically it is like a bank account. Like you open it under either a bank or KiwiSaver provider. Okay, let's assume you open it under a bank, and then after you open it under a bank, you can choose to contribute like 3% of your salary into a KiwiSaver, and then the government, your employer at the same time will contribute 3%. At this point, it's 3% of your salary, and you're contributing to your KiwiSaver. So it's like a bank account. It will keep accumulating money, but it's contributed from you and your employer. Then the government will also contribute a yearly amount. Previously, it's 521. Now it reduced to 260. And then it will, if you contribute more than 1,500 per year, you will get a full amount of the government contribution per year. And then the government will put this money into that bank account. So this bank account will have some money accumulating. So it's technically real money bank account. Then there is some, but you cannot withdraw money when you want from this bank account. So it's like in terms of KiwiSaver, it's like a saving account for all of the Kiwis, which is New Zealanders. So the only two circumstances that you can withdraw money from this account is, first, you want to buy your first house in New Zealand, and then you can withdraw this whole amount of money out from this bank account and to buy your first house, but you need to leave 1,000 inside. Like it has to have minimum 1,000 inside your KiwiSaver account. But then the rest of the money, you can always draw it out and then buy your first house. And the second thing, the second timing that you can withdraw this money is when you retired, which is after 65 years old. So it means like an account which is trying to save you some retirement saving, but after you get retired. But it is like it's not compulsory from a government, but the government encourage you to do it. And this is this is what is the KiwiSaver thing is.
Yeah, I think we have the same thing in Australia. We call it super.
Similar.
Similar, yeah. So it's kind of insurance for your retirement. Okay. Yeah. Thank you.
I think it's kind of labor insurance in Taiwan, but in New Zealand, we have many options. We can choose different banks because the major banks, they have their KiwiSaver account. So even we can change between different
you
banks.
can change different banks, and actually there are even some KiwiSaver like investor account like Meerford or Fisher King or like Generate KiwiSaver. They specialize in KiwiSaver, so they may make better investment decisions than the banks. They make your KiwiSaver performance may have better returns if you go through these KiwiSaver providers. Maybe, I'm not saying it's a must, but maybe. Because the KiwiSaver, what the KiwiSaver do, how they help you to, they also is like an investment account. So there is like an account manager holding your KiwiSaver account, and then they help you to invest your KiwiSaver money to other either funds or stocks. And then it depends on what kind of plan you choose, or there's something like that. And then when they invest through these investment instruments, then your KiwiSaver income will boost. And it's not like that money keep having the same amount inside, but they also help you to do some investments of your KiwiSaver, something like that. But yeah.
Okay, so anyone has any questions for Celia? If not, I have several questions for you. Yeah. So back to your background, why you decided to change your profession halfway? Because originally your previous major is linguistics, and now you relocate to New Zealand and you study your master degree in accounting. Yeah. So my question is why you want to change your major, and also, do you think accounting in New Zealand is a good choice for your career?
Oh, I think the reason is not like I intended to change, but it's more like I remember on the first day when I started in Zhongyuan Christian University, and our teacher, she told us that, guys, language is only a tool. Language, you need to have other profession to add with language. So I will encourage you guys to try to discover like your second profession during uni, because if you only rely on language, like to be honest, the career path is quite limited. Either you be an interpreter or you be like a teaching English in university or elementary school or something, but teaching English as a teacher, something like that. So yeah, so at that time when I heard that, I was like, oh yeah, I think that's something quite true. So I remember during undergraduate, I tried to go to our departments to discover about their courses. I went through accounting, I went through business administration, finance courses, and then I think that accounting is something at the time quite interests me. I think it's quite, saying it is fun is quite weird, but I think that it's something that I feel comfortable with. So I was like, hey, I think if I choose this one as my profession, it will be quite nice. I'm happy with it. At least when I work on it, I feel happy. And I think that's the thing which is most important. Like you need to choose something that you work on it and you don't hate it. So that's, and then you will have the enthusiasm to keep working on it, and you also have the passion as well. So yeah, so that's how I started to work on accounting. So actually I took some accounting courses in Zhongyuan Christian University. Those courses can also I think CPA Australia, they recognize them. So that also helped me a lot. So if I go through this slide, let me go back. This slide, which everyone missed out, sorry, due to technical issue. This one. So this slide, for my courses that I studied in Zhongyuan, because I also had some course in accounting department as well, they helped me to exempt my auditing, because I studied auditing during university already, and auditing is something which is worldwide same. So they recognize it at the same time. And I think the rest of the thing, they recognize it. These 5 subjects on the top, they recognize it during my postgrad courses, which I studied in University of Auckland. And this one, audit and assurance, they recognize it's the one which I studied in Zhongyuan Christian University. Yeah, so I think that the time that I'm studying, I know I took a lot of courses during undergraduate, but I don't think those time are wasted, and it's quite useful. Even till now, I'm still benefited through it. And that's how I started my accounting career. But if you ask me, like, do I suggest people to pursue an accounting career, I would say, like, it depends on what you want. I know that's quite a general answer, but I think for accounting career, like specifically in New Zealand, if you are looking to have a work visa, if you need a resident visa, I think choosing a career in accounting will be quite benefit for you to apply for your permanent visa, because there are a lot of accounting firms, they are looking for people, and these accounting firms, they are willing to help with your work visa or resident visa, I can say. I don't know if other industry, they have that much opportunity, but I can say most of my classmates, the reason why they choose accounting is because they say it's easier to apply for resident visa, because there are quite a lot of work vacancies in accounting. But also accounting is an area like you don't expect that you can earn big money in accounting, because these are not for accounting people. Like accounting people is more like you work and then you earn stable income, but of course your income maybe will be not over than those people who work in construction areas. So it depends on what you want, I think. But I think overall it's quite stable career, I can say like that.
Thank you. And another question is for your professional journey, professional career.
Yes.
So what's the biggest challenge you have when you first relocate to New Zealand, and what's your biggest challenge you have now?
I think the biggest challenge that I have when I relocate to New Zealand, it is like the cultural difference. I mean, it's more like there are a lot of, because I learned language during undergraduate, so my English ability is still okay to communicate. But in New Zealand, they have a lot of slangs they created by themselves, and these things like you need to try to communicate with people who live locally to know that these slangs gradually, or they have some abbreviations as well at the same time. So I think these are the main challenge when I started, because if you don't know their slangs, it will become more difficult for you to get to know them well or be part of them. So these are the major difficulties that I encounter when I just relocate to New Zealand. I think my current challenge is what Year One just he just asked me, like, what are you going to do next? I think that's my next challenge, because I cannot just stop here. But I'm also still looking for what is my next step to discover. I'm looking through different passes, but I'm still not quite sure which one to pursue yet. Also, it's reaching a time that I need to decide, like, do I want to keep working in a firm? Because to be honest, my work experience are all in accounting firms, and the firm experience are quite different with working in a normal corporate company. So it probably is reaching a point that I need to think about that, and that's what my current challenge it is as well.
Okay, thank you for the answer. And another question is, as far as I know, the taxation in Taiwan and New Zealand is quite different. So can you tell us what the major difference is? Yeah.
Because I actually I'm not familiar with Taiwan's taxation, because I never worked in Taiwan before. I graduated and then I came to New Zealand to work directly, so I only know about the New Zealand's taxation. So it will ask me about the difference, because I'm not familiar with Taiwan's taxation, so probably I'm not able to answer you. But if you can tell me something more specific, maybe I can let you know.
Okay, for example, the income tax, the personal income tax. I think in Taiwan we can have lots of deduction. But in New Zealand, you just have to, they tax you based on your gross income, not the net income. So you can't have any deduction. Yeah, I think that's the major difference. So that's why I always think, the tax in New Zealand is quite high, and we only probably 1/3 of our income we pay.
Because
tax.
Because I think the income tax rate bracket in New Zealand is quite high. Like even you have the lowest income, which is under 40,000, you still have to pay 10.5% of personal income tax, 10.5. And then like for Taiwan, from memory, because I'm unsure with Taiwan's tax rules, so correct me if I'm wrong. But from memory, if you earn like lower a certain amount of Taiwanese annual income, you don't have to pay any tax on it, right? Yes. And then in New Zealand, there is not even something like that. So New Zealand tax rate actually is quite high, and if you earn PAYE tax, the only thing that you can deduct is your accounting fee. But usually, if you are already on PAYE, you will not pay additional money for an accountant to do your tax either. So, which is something that is very I can say the deduction. If you earn PAYE on your personal income tax base, your deduction is not that much, unless today you have other residential rental income. But even you have residential rental income, your residential rental loss cannot be used to deduct your personal income tax wise as well. These two cannot be deducted together, cannot offset by each other. So also that doesn't really help as well in terms of saving tax. Like New Zealand, they like to having a company or having a trust, but those will have it will become more complicated and have a longer story about it, which I'm not able to cover in this Q&A session, of course. But yeah, the main way that New Zealand they try to minimize their tax is having company or having personal trust. Yes.
Okay, so now the government, they already announced the new budget, the 2025 growth budget, right? So do you think will this new budget plan will that increase our national debt?
Actually, it will lower our national debt. So, hey, we can see this chart. You see the core crime expenses. They forecast it will drop. It should drop as well, and that they focus that they are trying to drop their crown debt gradually at the same time. So actually, and because this budget this year they have is like the lowest amount of budget they have over the 10 years. So they are trying to minimize the debt because they know that in previous years the government overspent too much due to COVID and a lot of benefits things. So this year they are trying to spend less money but in a more efficient way.
Okay, great. Good to know that. Yeah. So another question is, do you know how the government spend our money, taxpayers' money? Because I work for Auckland Council, and I understand that I think we only get the budget from taxpayer. It's not from income tax. It's only from the rate. The property, yeah, the rate for your property. Yeah, so yeah, I didn't know how the government, how they spend our money and also how they allocate those budgets.
Yeah, because like we pay a lot of income tax every year, and where does those money go from? I think that is a question that all the taxpayer they want to know, like why you tax us that much and where is our money gone. So this is a chart that how the taxpayers' money have been spent right now. So actually, most of the money have been spent to health section. This is based on New Zealand Treasury's website, so it's official source. So most of the money have been spent on health. They try to build more hospital and also like lower the prescription fees, things like that. Like they remove the $5 prescription as well for the pharmacies when you go to get your medicine. I'm not sure are they bringing it back right now, but they previously removed the $5 prescription fees thing, which most of the money expenses goes to there. And then the second will be the social security and welfare. So it basically the taxpayers' money have been helped like for people who have lower or mid income, paying their benefit, job seeker, others like that. And the third place, which is very close to this category, it is the superannuation. So paying money to people who is elder people who hold a super gold card, something like that. And then it will be education and finance costs. So mainly it's also aligned with the budget this year that the government are majorly targeting on health and social welfare education area at the same time. So these are the main focus and the main area where the government spending our tax money. Yeah.
So do you have any idea of what's the current national debt level?
Current national debt level. I think if we go back to the previous chart, yeah, that the one on the right hand side, it has the core national net core debt level here. So now it's around like you can see it is around between 40 to 50% of the GDP. It is around that side.
Okay, you mean the right?
The right one, the net core debt, yeah.
Okay. So we only have the debt level is only 40% of GDP. Okay. Yeah, that makes sense. So overall, do you think New Zealand is a wealthy country or a poor country?
I think it's not bad. I think now, like, I know that there is recession going on right now, but I think overall it's trying to recover gradually. I can see there are some indicators like that the interest rate is also dropping as well at the same time. So I think that the economy is recovering slowly, but it is having some progress at least. So I still think that give the government some time, and I think the New Zealand economy will recover gradually.
Yeah, that makes sense. Yeah, because we can see the current government, they work very hard. They want to boost investment and also improve lots of infrastructure. Yeah, so hopefully we can have a promising economy
Hopefully.
And more people want to invest in New Zealand, and we can have more project to work on. Yeah. And all the engineer friends, you are welcome to join New Zealand, join Celia and me. Yeah. Okay, I think that's probably all for today's section. And thank you so much, Celia. We really appreciate your honest sharing and your kindness, generous sharing of your professional journey. And I think let's keep in touch. And I think maybe in the near future, we can have a further discussion about the taxation. And everyone who has any tax issue or tax questions, you are welcome to ask Celia. Okay. Thank you, everyone. Now we will.
For joining.
Yeah. Thank you, everyone, and we will change to Chinese session. Okay.
Okay.